Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching Indian Open. Let's go straight to the headlines at this hour. World leaders, including the Indian Prime Minister, arrive at Buenos Aires for the G20 meet. Donald Trump says a trade deal with China is not a given. RBI cuts down the minimum holding period for loans issued by NBFCs from 1 year to 6 months. The new norms are applicable for loans with a minimum maturity of 5 years. India's second quarter GDP is expected to grow at 7.5% according to the Bloomberg poll. Numbers come out later in the evening. And Jaguar Land Rover announces a temporary engine production shutdown in the UK to adjust output. Maybe that has a bit of an impact on Tata Motors as well, though the stock has come off quite a bit. By the way, but we'll talk about that in a bit. First, let's take a look at the trade setup for the day. The world markets, not a continuation of rally in the US markets. You could argue that 2.5–3% was a big jump, and I guess yesterday it mentioned that they expected it to be sideways, but a fairly dull session of sorts in the US markets. At least on close, they ended reasonably flattish with a marginal downtake. Not that this is a bit of a surprise. And is that having an impact on the other Asian markets? I would guess yes, because you would look at across the Asian screen and you will see just marginal ticks of green. Maybe ahead of the G20 summit and the big Trump-Xi Jinping meeting, all the markets would be on tenterhooks. So looking like a flattish start for the Asian markets, and the SGX Nifty indicating a similar start for our markets as well. But boy, are we complaining? 4 straight day of gains. In fact, if we have today ending in the green, after a really long time, we'll probably have 5 straight days of green for our markets. So interesting. And frankly, if you just look at what everybody in the markets are saying, for the US markets as well, valuations have become a lot more reasonable. For Indian markets, we have rallied a bit, but nowhere in the bubble territory. This is, of course, how the S&P 500 has come off, and the averages are now meeting what used to be the case maybe a year and a half, 2 years ago on the price earning multiples as well for the S&P 500. But yeah, a lot more reasonable, the world equities currently, and the US markets in particular, compared to what they were. What about the macro cues? And they kind of favor Indian markets, right? Crude oil might have inched up a little bit in early morning trade, but by and large, it's settled down to about 50–51 for NYMEX and about 60 for Brent, and most people saying that they are likely to remain range bound ahead of the OPEC meet, which is on the December 6th. The rupee closed at about 69.84, which is the strongest closing level in over 3 months. So that has been buoyed as well, in part by the Fed commentary and in part by what crude is doing. So not a bad close for the currency markets as well. And while we may argue that it's the large caps which are continuing to gain and the mid caps are not, but I think people are taking that with both hands. Look at this week's charts, for example, as well, and you will see that the white line is the Nifty and how well that has performed over the last 4 sessions versus the other 2 lines are the mid cap and the small cap indices. And there is very limited cheer for markets because the broader markets are just not performing. The market breadth has been more adverse on more days than it's been in the positive, but the large caps are performing, and that probably matters. It matters to the FIs for sure because they continue to pump in money, 823 crores and 973 crores yesterday, but more importantly, 6,100 crores in the preceding 5 sessions alone by the foreign institutional investors. So that's not a bad sign. In yesterday's session, as I said, 823 crores by the FIs put in. DI has also put in some money, 973 crores. So the flow situation doesn't seem to be all that bad. What would we watch today? Well, the GDP data released today, the Bloomberg poll expects a number of 7.5%. Yeah, all the internals will be dissected when the numbers come out, but just keep this baseline number at the back of your mind. The GDP growth is expected at 7.5% for Q2. However, in light of all of this, which we'll watch out for, and in light of the market starting on a flattish note, what are the stocks that you should keep at the back of your mind today? Some which will react at about 9,915 today. So firstly, NBFCs, the RBI has reduced the minimum holding period for securitization of loan portfolios. I'll dissect this in a little bit of granular detail in just a bit, but keep in mind, housing finance companies, they are the ones that are likely to benefit out of this. So do watch out for Growth Finance, Enables Housing Finance, PNB Housing Finance, all of those are likely to benefit. ITI, the norms haven't changed, but the CCA has now approved the procurement quota for ITI. What does this mean? 30% of the procurement orders placed by BSNL, MTNL and BBNL are reserved for ITI, and these reservations continue to remain till November 2021. So there was some bit of uncertainty around it. It's gone out of the window with the clearance yesterday. Let's see if ITI has a positive reaction or no. It will not have a negative reaction for sure. If at all it has a reaction, it's a positive reaction. Do watch out for ITI. Inox Leisure, the board has approved issuance of about 64 lakh equity shares at 250 each to the promoter Gujarat Fluorochemicals. Do watch for this one. And Alchem Labs, yesterday, remember, it had a downtick. A large bulk deal as well had cracked about 4 or 5% after the deal. I think the promoter family trust sold about 12.9 lakh shares at 1828. So clarity coming in on why Alchem Labs was under a bit of pressure today and on that bulk deal as well. However, let's try and tell you what's lined up on First Word today. The Trump-Xi meeting at the G20 summit will determine the trade relations between the two countries and the world over. Eric Schatzer tells us what is at stake. We examine RBI's latest measure to ease liquidity for non-bank lenders. Housing finance companies in particular may stand to benefit. I develop on that a little bit. Monthly auto sales are expected to drop in November despite the festival season. Jatin Mota will tell us what to expect. Markets remain volatile at best in 2018, and brokerages are recommending high dividend yielding stocks amidst these uncertainties. We speak a little bit about them. And Emphasis continues to outshine large cap technology peers with a 30% jump this year, but more importantly, a reversal the last couple of days. Do the fundamentals support this rally? Devina will join us with that. First up, US President Donald Trump is keeping the world guessing on how he will approach trade talks with the Chinese President Xi Jinping on Saturday at the G20 summit in Argentina. Trump told reporters before departing for the meeting that China talks could go either way. Listen in.
I think we're very close to doing something with China, but I don't know that I want to do it because what we have right now is billions and billions of dollars coming into the United States in the form of tariffs or taxes. So I really don't know, but I will tell you that I think China wants to make a deal. I'm open to making a deal, but frankly, I like the deal we have right now.
The meeting with Xi Jinping could determine whether the US and China can ultimately resolve the differences and lower tariffs currently affecting more than half of all the trade between the two countries. Or the outcome could be that the two sides will remain locked in a trade war with no end in sight. Bloomberg's Eric Schatzer reports.
Xi Jinping was in Madrid earlier this week. He talked about the global economy being at a crossroads, needing to choose between a more integrated trading relationship or perhaps something else. More in the spirit of the protectionism, perhaps, that we've seen from the United States in the Trump era. Trump, in addition to what you were saying today, well, let me put it this way. The Wall Street Journal reported, and so far as I'm aware, no one has matched this yet, that China and the United States are talking about a cooling off period during which the United States would hold off on imposing further tariffs on Chinese imports to give China time to come up with some kind of deeper economic response to the U.S. grievance. That would include protection for intellectual property, a lack of forced technology transfer, some questions, a resolution of questions around cyber espionage by the Chinese. If, in fact, that's really on the table and that's going to be taken up by Presidents Trump and Xi at their dinner here in Buenos Aires on Saturday night, I need not tell you that's a big deal. We're not getting any further confirmation from the White House or from the American delegation, so impossible to tell you at this point as to whether that is really a live issue here in Argentina.
Well, frankly, Buenos Aires and Argentina remain the center stage of what happens over the next 48 hours, so do watch out for this one. We'll, of course, bring you all the updates on our website, BloombergQuint.com. The next piece, RBI has made yet another relaxation as it tries to free up liquidity in the system. The banking regulator has reduced the holding period for secured loans. These loans have to be held for at least 5 years and have to originate from NBFCs. So the measure is known, and again, I request everybody who doesn't know about the measure to go up onto our website and try and read up what these measures are. I'll just try and what I'll try and do right now is just try and assess the impact of this RBI move. So what the notification applies to loans with maturity of greater than 5 years. You got to keep this at the back of your mind. So naturally, housing finance loans, etc., come into the purview. Maybe auto loans and consumer loans don't come into the purview. It is helpful for NBFCs, as I said, with a longer maturity period. That is something that you got to keep at the back of your mind. Don't think that all the NBFCs get impacted in a similar fashion. What this does, though, is that NBFCs can now hold such loans for only 6 months before they securitize it. Earlier, they had to hold these loans for 12 months before they go out and securitize it. Essentially, you securitize it, you get the money up front, and that starts the next cycle. It's great for liquidity in the system. So from the earlier 12-month holding period, it's now been pulled back to a 6-month holding period in a bi-quarterly fashion as well. So therefore, auto financiers would be the much less impacted one because their loan are not necessarily above the 5-year maturity. Most of their loans mature in under 5 years, and therefore there's a limited impact on the auto finance NBFCs. So the Shriram Transport Finance and the likes will not necessarily be the ones that will get impacted in a big way. What will get impacted in a reasonably big way compared to the others are the housing finance companies, because most of the incremental lending that companies like PNB Housing Finance, etc., are doing, which is the retail lending, is northwards of 5 years, and therefore for their portfolios this will be a bit of a relief than what was earlier the case. So frankly, if you expect companies to react in the session today, it would have to be housing finance companies, and companies like PNB Housing Finance, for example, stand out because 80% of their incremental lending, as I said, is northwards of the 5-year period, and therefore they are the ones that stand to benefit. So yet another measure, yet another small measure done by the Reserve Bank, not just for NBFCs, by the way, for MSMEs too, but from a impact perspective. We are highlighting the NBFCs, and more importantly, the housing finance NBFCs. They are the one that will stand to gain the most from this. So let's wait and watch if Group Finance, Indiabulls Housing Finance, but more importantly, our PNB Housing Finance react today in the session or no. These are the names that you should monitor. Okay. The third piece on First Word, and that's the auto sales. Now remember, October saw some moderation, and the monthly auto sales drop is only expected to increase in November. This is despite it being a festive season or a festival month. Yatin Mota has put together a poll of 3 brokerage houses to take us through what can be in store for automakers. Yatin, we already had the FADA guy come and talk about slightly tough times ahead, but for the month gone by, what is it that dealers are telling you?
So Neeraj, 2 factors that will be monitoring. Number one would be how really are the rural sales shaping up, because I think according to brokerages and dealers, the rural markets have been buoyant, because of which the overall two-wheeler growth picture and the two-wheeler wholesales would be better than the industry growth. So on the two-wheeler front, we are confident that there could be some good growth numbers coming in for Bajaj Auto, Hero MotoCorp and the likes of TVS Motors. But the worrisome point is the commercial vehicle side as well as the passenger vehicle segment. And as you were mentioning earlier, the couple of interactions that we had, we have clearly seen a trend of slower festive season sales, which means that the retail sales on the ground have been slower. There is inventory buildup on the ground, and probably because of which we could see some decline in the overall sales numbers. So if you talk about Maruti Suzuki, we are expecting a 5% kind of a decline there on a year-on-year basis. As far as the commercial vehicle segment is concerned, again, their higher fuel cost, the liquidity issues at NBFCs have impacted the sales numbers. So both Tata Motors as well as Ashok Leyland would see a drop of nearly 2 to 3% on a year-on-year basis when it comes to the wholesale numbers. More importantly, the commercial vehicle segment is coming off a higher base, and that base effect will also play its own role. As I was mentioning earlier, the two-wheeler space is something that we'll be watching out for. So we have Bajaj Auto, TVS Motors, Royal Enfield as well as Hero MotoCorp. All of these companies will show growth. In fact, we'll have a stronger growth for Bajaj Auto and TVS Motors because of the strong export market sales, as well as the domestic sale for Bajaj Auto will look up because of the new launches. Royal Enfield, that is one interesting thing that we'll be watching out for. Eicher Motors, given the fact that they were able to resolve their Chennai plant issues, the production has caught up. So this time we could see some good, sales numbers. So hence we are expecting a 5% kind of a growth. And Hero MotoCorp, of course, a 3% growth on the back of, the rural demand, which is, coming in. So despite the weaker, festive season, we have the rural markets which are clearly helping or aiding the sales for Hero MotoCorp. However, if you look at the other segments like the automotive segment or the UV segment for Mahindra and Mahindra, the tractor segment for Escorts and M&M Agri, there also we're expecting a double-digit kind of a growth number, simply to do with the fact that these guys are coming out with a smaller base. The festive season sales have been good. Northern markets have been good. Automotive side of M&M would see good volumes on the back of better Marazzo sales. Mahindra and Mahindra, double-digit growth for both the tractor segment as well as for the agri segment.
The one stock on which one number would bring about a reaction, Yatin, if it's possible to predict that.
It's clearly Eicher Motors, Neeraj. The markets have been talking about slowdown. We have a couple of brokerage reports which say that the growth is slowing, waiting periods are coming down. Of course, this time it's interesting to see, since we have a catch-up on production because of the Chennai plant, how really does the sale number come in? Because for the past few days, the stock has been nervous on good volumes, mind you. So Eicher Motors is one stock I'll be watching out for on the back of the Royal Enfield sales volume, as well as on the commercial vehicle side.
Okay, so do watch out. The numbers will start, of course, trickling in over the weekend as well. So maybe some bit of a reaction will only happen post the market opens on Monday. But do watch out for Eicher Motors individually as well. Yatin, thanks for putting that into perspective. That's the auto sales data and what could happen there. Okay, now the theory of buying into cheaper names offering attractive dividend yields is now starting to find favor in global markets. A number of notes, including CLSA, have also mentioned Indian companies within the Asia-Pacific region as the ones offering good dividend yield buying prospects. What we try to do is filter out the list of companies in India offering potential dividend yield of over 5% by selecting companies with a market cap of over 1,000 crores. That's the parameter that we've used. 19 companies made the cut. And then I thought of picking up 5 out of the more liquid ones from different sectors and examine the pros and cons of a dividend yield backed purchase in these names. So, let's get that going and try and talk about those 4 or 5 names and whether or not there is merit there. This is essentially the rough dividend yield that each of these plays offer and the kind of valuations that they are trading at. So in one page, 5 randomly chosen names based on the liquidity parameters and the different sectors that they are in. Mind you, only one private sector name, the other 4 are all PSUs, and the kind of valuations that they are trading at. Some cheap, some not so. But let's examine what's working and what are the key risks for each of these names if you indeed think or hear an argument about getting into these names based on the dividend yield. So ONGC, what's working? I think across the brokerage houses notes that I read, it's discounting oil net realizations at about $48 to $50 a barrel. The actual realizations could well be slightly higher, maybe $55, maybe $60 a barrel. There's a strong dividend payout due to government pressures, which is possible for ONGC, and the P multiples are near historic troughs for the company. Remember, by the way, when we talk about the dividend for ONGC, you could argue that it's not paid dividend in the recent past, but because that the board is evaluating a dividend or a buyback offering. So that is something that you have to keep in mind. The key risks for ONGC, a higher subsidy payout that it might be forced to, or sharp decline in gas prices and or production coupled would be a risk to the price. So even if you bought in from a dividend yield perspective, if the price were to decline, then it would be an issue. And remember, by the time the CLSA note came out and cited ONGC as a stock to get into, the stock has already come off quite a bit. So those risks need to be kept in mind when you're looking at an ONGC. 27 or 28% down in the current financial year or the current calendar year. The next one, HPCL. Again, historic, if you look at the historic basis, interesting dividend yield about 6 to 7%. The P multiples are not that bad. What's working? The valuations are in favor, and it's discounting net oil marketing margins at 0 or thereabouts. And this is a chat that I have with Somit enough number of times. But the key risks for HPCL, and very well known, rising investments in refinery upgrades, possible integration with ONGC, greenfield refinery investments in Rajasthan, and of course, any kind of government intervention that could come in. So I believe that risk has now subsided with crude prices coming off. But remember, the reason why the HPCL stock price took a hammering was because of some bit of government intervention coming in. So that remains a bit of a bugbear for HPCL, but on a dividend yield basis, not a bad one. PTC India. Price to book valuations, very attractive, dividend yield of about 5%. What's working? They've recently signed large quantum of PPAs, and that should aid earnings over the next few years. There is, of course, a higher than expected offtake from each of these PPAs that have been signed in by PTC India, which could offer further upsides for the company's earnings as well. But frankly, the one big risk for any company in this field, and particularly PTC India, is delay in realization of dues from the state electricity boards. Of course, deployment of cash into low gestation, low ROE projects could also be the reason. But even if you assume that the board will or the company will not take any such decision, the delay in realizations would be a key risk for a PTC India as well. However, valuation is very attractive, dividend yield not that bad. Again, it's attractive on a dividend yield basis because the stock has corrected northwards of 30%. Similarly for Nalco, right? EV/EBITDA 3.2 times, dividend yield a very attractive 8.5 times if you look at the previous dividends declared. What's working for the company? Aside of the fact that the Q2 numbers were good, even though slightly below expectations, they have a fairly decent cash balance, 3,000 crores, even adjusted for the buyback. There is a possible upside to the dividend payout ratio, which a lot of people believe post a strong quarter two. The very strong quarter two led people to believe that the dividend payout could only increase. And frankly, valuations are reasonable. The EV/EBITDA is the lowest in the last 7 years, at least for Nalco, which is, well, quite a statistic really for a company in a space which has been on a bit of a run in the last few quarters. The key risks: the alumina rally is showing some signs of reversal. There is a global slowdown imminent, and that could have a bearing on what aluminum prices and alumina prices do as well. The project delays, which Nalco is set to set up, could well play a part in playing spoil sport for Nalco. And increased scrap imports into India could also deter what's really working on the fundamental front for Nalco. Having said that, while these risks remain, their quarterly performance is robust. The commentary from the management is robust. A 22.5% drop this year, in line with the other metal companies, makes it a very attractive dividend yield play. But keep in mind the risks that are there at play out here. The last company is a private sector company, and Bombay Stock Exchange. Again, a lackluster performer. The argument in BSE's favor right now is just this, that it becomes a very attractive dividend yield play. 6% dividend yield, though valuations are not cheap by any stretch of imagination. But what's working? The net cash of about 450 rupees per share. And there are new growth engines which people believe might rev up growth for the company. But there is visible weakness in core business streams, and it was evident, starkly evident in the quarter two numbers. They are losing equity cash market share as well, which is a bit of a worry for BSE, long-standing. But the currency derivative share is now at 47.3%. It's down to 47.3% from northwards of 50% a quarter ago. So that is a bit of a worry too. In a lot of key markets, you can understand that in equity derivatives and otherwise, NSE anyways had a head start, but they had the head start in the currency derivative markets, BSE, and they've lost that bit of share as well. So it's a bit of an issue out here with BSE. Valuations are not the cheapest, but it's got a lot of cash on its books, and maybe that helps. And again, the reason why it features in this list is because it's lost about 34%. So a lot of these stocks appear very attractive, but you might want to think once or twice before you get into it. I spoke to a few experts, just the last piece on this one. I spoke to a few experts about whether it's a good bet to take on some of these dividend yield stocks. Without getting into stock specific names, a couple of reactions that I'll bring to you. Samit Vartak of Sage One Investments, for example, said that it's a good strategy if you're looking for safe bets as an alternative to FD returns. But once your return expectations as an investor cross 20%, majority of returns will come from earnings growth, and very rarely you will find a strong growth company with a high dividend yield. And it's evident in the way these companies have performed as well. These are not strong growth companies. Therefore, they are giving high dividend yields. So if you want just FD beating returns, maybe not a bad idea. But otherwise, you might want to think twice. Vikas Khemani of Carnelian Investment Managers mentioned something to the contrary, that for the safe investors, the high dividend yield is generally a good starting point for evaluation. One has to look at the sustainability of dividend and the growth aspect. If you can get your comfort around either of them, which is the sustainability of dividend or growth, then it will be a good investment. But again, it goes to show that if you are indeed in the camp which believes that you want to get that FD beating returns, then go out for these dividend yield stocks. Otherwise, you should look out for growth pastures. The last piece on First Word today is on Mphasis. It's the third best performer in the BSE Midcap Index, perhaps a reflection of the investors' confidence in the midcap IT stocks, outshining their bigger peers. A trend that's been highlighted by various market experts and industry veterans. But do the fundamentals support the more than 30% rise this year in Mphasis? Devina Khanna has done some number crunching. And Devina, frankly, it becomes important because of the way Mphasis and some of the other mid-cap IT stocks rose after falling quite a bit. What do you have for us?
Yeah, so Mphasis obviously is not the best performing mid-cap stock. You have a stock like Mindtree and you have a stock like NIIT Tech, which has done way better than Mphasis. But the fact that the stock has actually fallen from levels of 1270, which is almost 25% given up to where it's now, and still given year-to-date returns of 30% to investors, is definitely an interesting proposition. And a lot of brokerages now starting to look at the future visibility of earnings for Mphasis post Blackstone acquiring that 50% stake. Even as per Bloomberg polls, there are still a majority of analysts that are recommending a buy, and there's about 57% analysts still recommend a buy with a 26% potential upside to the stock. I'll get down to the numbers in a bit, but just quickly, if you even have to look at valuations, within the mid-cap IT space, all of the valuations from the last 5 years average have started to come off. Mphasis itself has come off from about 17.3 times to about 16.5 times post this recent fall that we've seen. And why have we seen this fall? Obviously, they announced their buyback sometime towards the end of August, and you did see a slight sell-off from the institutional side. So if you see a quarter-on-quarter shareholding change, you'll see that the institutional investors have reduced their holding from about 38.24% to 37.7%. Where has that gone, and where? So the retail investors actually picked up what the institutional investors given up in hopes of making some money in the buyback period. So the retail and non-institutional investors' shareholding has actually gone up from the quarter ended June to quarter ended September by about 0.5% to 9.89%. Well, recent announcements, like I said, buyback of 1,000 crores. This is the second buyback in 2 years post the Blackstone deal. So 1,100 crores in 2017, about another 1,000 crores now. Buyback price of 13.50 also instilling more confidence. The management feels that the valuations are right. What's working for the company? They have a committed order book of 5 years from HP. So technically, you've got about $990 million worth of revenues coming in from HP starting 2017 up until 2022. So that's the visibility that's coming in. Non-HP contracts are also at a historic highs for Mphasis at $210 odd million that we're seeing for Mphasis this time around. That's the historic high. And the visibility for that is that you may see this lead to early double-digit growth in the non-HP segment as well. Again, like I said, valuations look slightly more reasonable than they were some time back. Now, what are brokerages saying? Nomura, for one, says the Blackstone portfolio is the big win for Mphasis. There is a potential of about $1.5 billion of addressable opportunity for them. The company can generate about $150 million annually by FY21. That's almost a 40% of overall incremental growth from just the BS portfolio. Morgan Stanley, on the other hand, they said that the recent acquisition of Stelligent enhances its focus on the public cloud service market. Now, Mphasis is trying to be a hyper-specialized vendor, and that appears to be working well for the counter. Strong growth in the DXC HP channel along with the direct channel could drive further revenue and margin trajectory for the management. And remember, the management came a month back and they spoke about their three-pronged approach. They want to focus on margin expansion. They want to focus on cash generation so that it creates more shareholder value. Another interesting aspect, obviously, is the buyback. Now, when Blackstone bought the stake of Mphasis for $1.1 billion, they didn't pay everything in cash. They went to the bond market. They raised $500 million in the bond market at 5.3%. And on the back, that the payouts will be done from Mphasis. So that now 5.3% coupon on that $500 million works out to somewhere closer to 200 crores, which Blackstone needs to be paid by Mphasis on a year-on-year basis. Okay. For which they need to actually raise 400 crores because Blackstone owns 50% of that.
You mean Mphasis needs to pay out 400 crores?
Yes.
Because Blackstone owns 50%,
which
so Blackstone will get 200 crores. Okay.
Which means, the possibility of buybacks on a consistent year-on-year basis till 2022, 1,000 odd crores is what they've been doing since 2 years, since Blackstone got hold of Mphasis. The possibility of another 3,000 odd crores in yearly buybacks could be seen. Now, if that happens, that's obviously good for shareholders. Or what that does is increases the EPS. So if you have 1,000 crores being, the holding comes off by 15 to 20%. If that becomes 3,000 crores by 2022, which means with the same profit, lesser shareholding, your EPS goes up that much more. I mean, this is obviously, an interesting angle that has been presented by Deepak Shenoy of Capital Mine. But nonetheless, the growth opportunity is still there, and the buyback presents a definite of definite interest to shareholders.
Devina, thanks for putting that into perspective. So multiple things which could be working for an Mphasis shareholder, even though the stock has come off. But the reason why we thought of doing this today is because of the recent interest, the last 2 or 3 days, the kind of interest that we've had in mid-cap IT after a bit of a fall, a bit of a pullback in the last couple of days. But that brings us to the end of First Word. Lots more lined up on Indian Open. We discussed the increase in stamp duty in Maharashtra and the evolving liquidity situation with Sangeeta Prasad of Mahindra Lifespace Developers, and whether softer crude prices and pet coke prices bring cheer to cement makers. And the pricing scenario, the whole-time director of Sanghi Cement, Beena Engineer, dwells in on that. But after this break, a full tilt towards the day's trade.
It's not about the award. It never is. It's about what went before and what came after.
It's about getting recognized for the trust and confidence the customer has shown on us. We actually strive for it.
It's about the brightest ideas and cleverest implementations. It's about innovation.
It's about impact for manufacturers and help for shoppers. Tangible, meaningful impact for manufacturers who innovate, and genuine help for shoppers looking for the best new things on the shelves.
It's not about the award. It is about standing out. It's about being a giant even if you're really, really small. It's about picking the leaders of tomorrow, today. It's not about the award. It's about competing.
It's about an unbiased, countrywide, face-to-face consumer survey that is unique and provides relevance and differentiation. Essentially, we're adding something to the marketing arsenal of product teams.
It's about doing one's best and raising the bar each time.
So it's about the end customer. If you have that clarity, what is this need that you're trying to solve for the end customer?
About exceeding expectations. About going all in. Coming. Product of the Year.
It's about feeling good that we are associated with Product of the Year. This is our 10th year.
30 years of finding brands that capture $1 billion.
Hello and welcome. You're watching Indian Open right here on Bloomberg Quint. Asia has a pocket looking fairly okay. We've got a flattish move coming in there for Nikkei 225 actually. There's absolutely flat. 0.5% gain on Shanghai and more than 0.5% gain on Hang Seng. So 26,630 there. For SGX Nifty, after yesterday's Big Bang expiry move, for our markets, another indication of a positive start, about a third of a percent higher on the SGX Nifty, making its prompt approach towards 11,000. for the Nifty. Yesterday was the crucial expiry of the November series, and what a series it has been. 7.5% higher on the Nifty, making its approach once again to those highs. We came off from levels of about 10,100, 10,200, and a great pickup from thereabouts. But let's see what happens, come the new series, start of the new series today. We've got Gurmeet Chadha as well joining in right now with his views in the market. Gurmeet, good morning to you. A really good month. I mean, something that probably people would have awaited considering where we came off from the month of October. 7.5% gain on the Nifty index. But does it worry you that it was more shallow and the broader markets didn't pitch in as much?
Not really, Ravina. I think, in fact, if you see this up move, barring metals and pharma is a little more broad-based than the rally which happened from 10,500 to the peak market made. Obviously, there's still not, it's still not what, as you rightly said, not as broad-based as some of the portfolio managers would have liked it to. But I think what has happened is 2-3, triggers which will give us a little comfort from a medium-term perspective is, one is, as Neeraj was pointing out earlier in the show, was on oil. Second, I think this NBFC jitter, I think has, I think will lead to a structural shift in the way credit ratings are evaluated, not just only dependency on the rating agencies. The internal credit norms will change. So I think, hiccups like these really boost the system. And I'm very satisfied. And, initially there was a delay in terms of where the regulator intervened. But I think now we are seeing incremental steps, not only on easing liquidity, but also in terms of how to structurally, address these issues. So I think these macros will help us. I think the bigger joker, as we rightly discussed last time, is the elections, which could have some knee-jerk reactions. But broadly, I think the deteriorating macros, which we were worried about, to a large extent, that's been addressed.
Interesting. Gurmeet, good morning. You do a lot of scuttlebutt investing of sorts. Did you have a chance to speak to anybody about what these new RBI norms, small as they may be, but would mean for the housing finance companies? I thought a PNB Housing Finance, for example, incremental lending close to 80% is northwards of 5 years, and therefore they will benefit in a meaningful way from this liquidity perspective. Anything that you've gathered from any of your conversations with people?
Yes, Neeraj, I think so one is obviously the biggest beneficiaries would be HFCs. Also, if you see, you can now securitize assets after 6 months. Earlier, the minimum waiting period was 1 year. So that will also help because a lot of the issuances also happen through CPs, which are less than a year maturity. So I think the liquidity tap will definitely get open. And if you see, Neeraj, even on the credit funds which got a very big redemption pressure in September and October, the flows have stabilized. Ones which also got very badly impacted, like the BI Exa fund, the Invesco fund, the DSP fund, the flows have now stabilized. We're not seeing incremental redemptions. In fact, there have been some additions to some credit funds as the confidence returns back, and the bigger fund houses are obviously getting the larger flows. So once these flows pick up, in some of the not just AAA but mixed portfolios, you will see more easing. And I've been maintaining this. The bond market and the CP market would be a trigger. If once stability returns there, I think you will see some stability returning to equity markets as well.
Interesting. Gurmeet, what about the mid-cap IT pack? We were just talking about Emphasis before you came on, and how that one has a few riders riding for it. Mindtree yesterday failed to do well despite the fact that on all trading parameters it was looking okay, but the valuations a little bit more reasonable than what they were looking like earlier. Do you have a favorite from amongst these?
Emphasis, yes, Neeraj, as you were discussing, I tuned in on Blackstone, on the HP order book. Also, what's more encouraging, as you rightly pointed out, is one is obviously valuations. Second, also, if you see the deal wins and the order flow, I think to me that looks sustainable. I think the pure arbitrage which a lot of the Indian IT sector enjoyed and the dependencies, I think, gradually coming down. If you see the digital piece of business, whether it is for TCS, even the larger ones, the share of cloud, automation, analytics is incrementally contributing to the overall revenue pie, and the guidance looks extremely encouraging. We've seen a lot of acquisitions because they're sitting on large, cash reserves. The top two, which is TCS and Infy. So on valuation, I like Infy more than TCS. And the other thing we discussed that day is that the BFSI vertical is contributing. So even in constant currency terms, last 2 quarters, I'm not just, and if you remove the currency tailwind, we are seeing 4-5% growth in the traditional, verticals like BFSI, which is very encouraging.
Okay. Gurmeet, lots to talk about, but just stay on with us. We have our research team ready. We're going to be talking about a few more stocks in news. Something coming out of the Zensar analyst meet and what they are talking about. Agam joins in for that. But let me go across to Yash first for some stocks in news.
Devina, I'll start with the housing finance companies which will benefit from the RBI notification, essentially halving the minimum holding period for originating loans from 12 months to 6 months or 2 quarterly installments. Tata Motors will also be in focus today after the company's luxury car arm Jaguar Land Rover said that it would be temporarily stopping production at one of its engine plant in UK till Christmas. Inox Leisure, there the board has approved to raise close to 164 crore rupees via preferential issue to the promoter group company, which is Gujarat Fluorochemicals. Vodafone Idea, CRISIL has downgraded the NCDs worth close to 6,000 crores from CRISIL AA minus to A plus, citing continued pricing pressure in the telecom industry, leading to weak operating performance. We had lots of key bulk deals coming in. Repco Home Finance should be one that you need to watch out for, wherein ace investor Monish Pabrai, through his investment fund, Pabrai Investment Fund, has sold close to 9.5 lakh shares, or about 1.5% stake in the company. MCX is where Eastbridge Capital has bought close to 4 lakh shares, and Equitas Holdings would be in focus as well after Kotak Mahindra Mutual Fund sold close to 25.8 lakh shares as well.
All right, those are some stocks in news. Agam, Zensar Tech.
Right, so we had an analyst meet and they were just giving us an update with respect to what's happening with the company. So firstly, they have spoken about focus on solution suite, which integrates human experience and smart platforms. They've also spoken about focus on large and transformative deal wins, digital specialists for key accounts. Once again, they're also looking at the digital revenues, which now forms as much as 44% of their revenues, which is very much in line with a lot of the other mid-cap companies as well that we've seen. They're actively looking at assets in chosen verticals, and they're also building a team which will focus on deal origination. They are looking at deals which are higher than $20 million worth, and in fact they've already scored at least one deal in all these verticals in the last 18 months, and they will look to seek more deals which are larger than $20 million going forward as well. On the whole, just some developments coming through when it comes to Zensar Tech's analyst meet.
Okay, guys, thanks a lot for that. So those are a few more stocks to keep an eye out for as we open up for trade. Gurmeet, I'll come to you with the Tata Motors now. Aside from the shutdown of the Solihull plant, now you have another plant going, the engine plant going to shut for another 2 weeks. I mean, indications are slightly more, if you say concerning for a shareholder sitting out and watching and waiting for things to turn around.
Yeah, so Devina, only on current price, I think I would give 200 rupees to Tata Motors only on domestic and the CV business. But as you rightly pointed out, the sentiment remains weak. We've seen production shutdowns with the JLR volumes have been low. I think there'll be a further cut this quarter. I think it's better to wait for a quarter. There are more cheaper, better plays, in the auto pack. If you see M&M on FY20 basis, it's about 11 times, and there are new models which have been launched. Some of the macro headwinds on fuel and commodity prices, which were adding to the cost pressures and the margin pressures, will ebb out. There are a couple of good two-wheelers makers. So Bajaj Auto looks very, very good. The Eicher first cut response to the 650cc model has been very good, especially from North America. So I think there are better plays, more predictable plays where you can, and we've seen a pullback in the market. So just going against the sentiment may not make too much sense. But I agree, valuations look tempting.
Okay. in the auto space there. Nonetheless, just carrying forward the discussion on auto itself, we're going to be seeing the volume numbers kick-starting. And within the two-wheeler space now, there's a lot of talks of whether you look at an Eicher Motors, a Hero MotoCorp, a TVS, a Bajaj Auto, which one stacks up at the top of the heap for you?
So in the order, it would be Bajaj, Eicher, and Hero. Bajaj also the new Pulsar launch would also aid some volumes. I think their last month numbers were very good. In fact, much better than Hero. And I think the headroom to expand market share is quite high. The three-wheelers also seems to be doing well for Bajaj Auto. So I would be in that order. It would be Bajaj, Eicher, and Hero. And I think a lot of what we are seeing is that these elections are also a bit of a mini stimulus, especially in the rural parts. We are. I think the delayed festive season will also and the high base thing will also ease off. So I expect auto numbers to come back. It may not immediately reflect in the November numbers, but overall with year-end discounts, NBFCs coming back, I think the numbers will stack. Overall for the quarter would be pretty decent.
Gurmeet, stay on. 8:45. Time to talk about some charts as well, and both our experts are with us to talk about that. Jay Bala as well as Brijesh Bhatia with us. Gentlemen, both of you, good morning. Thank you so much for joining in. Jay, let me start off with you. It's been a phenomenal week, 4 straight days of gains, and an expiry day, the Nifty Bank putting on some exceptional showing. What happens now? What does one do from here on?
See, the markets are looking a bit stretched in the short term, and the breadth of the market is not as promising as it should be at current levels. But this doesn't impact the medium-term trend. The medium-term trend is bullish, which I've been saying that the markets are heading past the record highs to somewhere about 12,400, 12,600. So there is no change in the long-term view. But in the extreme short term, the markets are likely to see some pullback. And what sort of pullback? That is, into my mind, it could be a very sharp pullback, but it could be shallower than anticipated. So the demarkers for the markets in the extreme short term is about 10,930 on the Nifty spot. And I would expect the correction to be at least somewhere to the region of 10,500, maybe even 10,440. So watch out for these supports. And the backing index is slightly better off, slightly stronger than the Nifty, thanks to Axis and ICICIs of the world. And here too, the structure is similar, but the pullback can be shallower than the pullback that you might see in the broader Nifty. So look for something like 26,600 to hold up this market, and the backing index to range between 27,100 to 26,600.
Jay, let's talk about some stock ideas of yours as well. You're liking an India Cement. You've placed a target of 99 on the counter, and you're going short on a Bharti Airtel. Why so?
Yeah, cements have been doing pretty okay, and from the low, India Cements has actually seen a harmonic correction, and yesterday's low was pretty important for me. And it's given us a short-term reversal bar. So I'm of the opinion that this is actually not just a flash in the pan. It's going to continue at least for the next few sessions. And I would expect it to touch somewhere close to 9,900. So one can place a stop below the stop that's shown on the screen. And the second one is a short on Bharti. Bharti, I'm negative on this. I think that it's going below the recent low. And it's come back to 340 on good news, and that good news has been not able to drive this market higher. That is an indication that there are more negatives that's brewing in this market. So I would place a stop above 340 and expect Bharti to break 260. This is a positional short, not an intraday short, but I would expect some sort of negative to set in even from a 1 to 2 sessions time frame.
Okay. Brijesh Bhatia, what is your index strategy for the day today? Do you feel that the markets are looking overstretched as well?
I think momentum is clearly in the bullish court, and if you look at the momentum yesterday or this week, It has clearly broken out of the resistance zone, which it was the gap, as well as if you look at the technical formation, it is breaking out of the bullish head and shoulder pattern. So I think for momentum base, this momentum may take towards 10,970 to 11,015 on the upside. And I think the yesterday's low was around 782, which might act as a strong support. And one can place a stop loss below those levels and look for another 100 pointer, 130 pointer upside on Nifty. So I would play long on it.
Okay, what about some other stocks then? You've got a buy on Pidilite and a buy on Titan.
Yeah. So if you look at the Titan post-result, it has given a breakdown and the failure has been a strong upside. So I think the breakdown failure and reversal is gaining a strong momentum with trendline breakout now. So I think Titan is the buy for the target of around 984 on the upside, and one can place a stop loss to 910. And if you look at the Pidilite yesterday's momentum was very, very strong and volumes were nearly 6 months high. And with the stock breaking out of the double top on point and bigger chart with strong volumes, indicating that momentum would continue on the upside, and I'm expecting the target of around 1280 on the upside, and one can place a stop loss of 1155 at 1185 the current price.
Okay. Jay, just one quick question. Any call which was given in the last 1 month which has worked really well and now you would want to take money off the table, either on the long or the short side?
Yeah, actually, I've been of the opinion that IT stocks are found to see a bottom around the recent lows, and that's exceeded the low projected by about 100 points on the CNX IT index. And we're seeing some positive price action come through from the frontline IT names like Infosys, TCS, and all that. So that's likely to percolate. So I would percolate into second-rung IT names. So watch out for better performance from Tata Elxsi, Oracle Financials, even emphasis over the next few weeks. So this is more a reiteration of the past call, and I would expect CNX IT index to take out record highs and go past 18,000. So that's more a reiteration of the earlier call.
Okay, since we are talking about IT, the Bloomberg Edge today is about an IT stock, I believe. Let's go on to our special segment. Yash Upadhyay tells us about a pattern that the terminal is thrown up on a stock or an index, and I believe it's an IT stock today, Yash.
Yes, good morning, Neeraj. So the IT stock we are talking about is Zensar Tech, and a positive call coming in with the help of the MACD indicator. Let's just try and understand what it is. Basically, the MACD indicator is a trend following momentum indicator, and it shows the relationship between two moving averages. How do you interpret it? You go long when the MACD line crosses above the signal line from below, and you sell when the MACD line falls below the signal line. Now, in the case of Zensar Technologies, the blue line over here, if you could enlarge this part of the chart, that has crossed above the signal line and has created a positive cross. So it had crossed above the white signal line a few days back, but it found itself difficult to trade above those levels, and it fell below them. But yet again, it is making another attempt to go above from the current levels. If you could get the price chart up again. We've seen that the stock has been in a bit of a mixed territory. It has gone from the levels of about 280, and then it's again fallen down to 220, and now it's started to make a run up. For the last 3 days, it has been gaining, and there could be further upside or more legs to this movement on the positive front.
And how has this worked in the past?
Devina, 4 out of the 7 times you went long when the indicator turned bullish, it would have given you positive returns and on an average of more than 9%, at least in the last 1 year.
So kind of slightly better than 50-50, not the usual Yash chart which gives returns 7 out of 9 times or thereabouts, but still an interesting one to monitor. Yash, thanks for putting that into perspective. And Jayabala, of course, believed that the downtick on the IT space was also a bit overstretched and maybe a bounce could come in as well. So interesting names. Gurmeet, of course, spoke about what he likes within that IT pack. Gurmeet, one more company, a PSU name. I don't know if you got to look at the announcement from ITI. It's a tiny tune really, but tends to react very actively, and which is why this question, that procurement policy 30% from BSNL, BBNL and MTNL kept on for ITI. Is this a trigger of sorts for the stock or not quite?
Neeraj, I think these triggers could be best tactical plays, and on the PSU space you also covered on. So for people looking at some tactical plays in their stocks which will give you good dividend yields, so could be a debt plus kind of an allocation there. I think a better way to play the PSU route to me now looks the CPSE ETF. I think the composition is better. The dividend yields are good. You're getting it at a 4.5% discount. Valuations we've already covered. So best advice to go to that route. Gives you a more basket so that regulatory risk and event risk also gets a little bit mitigated. So within that pack, if you really want to play a dividend yield and a growth story, I think, as I reiterated, we've covered HPCL multiple times. I think that to me looks 6-7% dividend yield and still 45% down from YTD. And if oil can remain here, and if you see government, the price of the fuel reduction, cut has been just about 10 to 12%. The fuel reduction and coupled with rupee appreciation, the overall impact is a little more than 30%. So there will be a balance sheet repair which will happen, and they are doing the right thing. They are passing it off with a lag.
Okay, Gurmeet, sorry, just had to come in because 5 minutes to go for market pre-open. And on the RBI moves that have happened, Mr. R. Vardarajan, MD of Repco Home Finance, joins us right now on the show for taking us to the impact. Mr. Vardarajan, good having you. Thanks for joining in. I think the belief in the system is that housing finance companies would benefit the most out of the changes because of the changes that were impacted by RBI yesterday. How do you stand to gain out of this?
So you are right. Particularly housing finance companies, they have a longer tenor of the loans. And when they say loans above 5 years and which has passed already 6 months, the maturity period of more than 5 years are eligible for this securitization. This is a welcome move for all the housing finance companies, and it will definitely ease the liquidity position for the housing finance companies, and also it will release the capital for further lending. It's a good move. But as far as my company is concerned, so far we have not done securitization, so we are seeing the impact. How it is going to benefit us, and if it is going to benefit us, certainly we will take it.
Sir, so while you said you've not already taken it, what is the portfolio amount, if you could highlight for us, that is eligible for securitization, if you have to go in for it right now?
No, see, we have a portfolio of more than 10,400 crores of book size for us. And I can say almost 80% of it will be, Reserve Bank says 20% retention is sufficient, but we may not go for the full, but we will only see the impact. But technically or theoretically, if you ask, at least 80% of the book is eligible for that.
Okay. One last question, Mr. Vardarajan, from an industry perspective. So we know it's an obvious relief. Is it possible to even remotely quantify what does this do to liquidity? Does it improve it materially, or is this just a small shot in the arm?
No, it all depends on how the NBFCs are going to make use of it.
But assuming that you were to make use of this, Mr. Vardarajan, would it be a big shot in the arm, or is this one more small measure that will aid?
No, you can't say small measure, but it's one more measure. Both the government and RBI they are discussing, and they want to ease the liquidity because that IL&FS crisis has really impacted the NBFCs. Therefore, it's a good move. In that way, I can say it's a welcome move.
Okay, Mr. Vardarajan, we'll leave it at that. Thanks so much for taking the time out and giving us that clarity. So, well, that's a home finance company itself doesn't get benefited, but believes that there will be some benefits. Watch out, I think, from whatever notes I read, I think PNB Housing Finance was the one, Ravina, that probably stands to gain quite a bit because 80% of its incremental lending is in this category over 5 years. Securitization might just help.
So is Repco Home Finance. You just mentioned that 80%.
Right.
Too. So most of the housing finance companies, actually, majority of their portfolio will be 5 years
but I think
plus.
PNB Housing Finance has been making use of this securitization in the past as well.
Yeah, probably.
So let's just wait and watch if this one has a reaction in the session today or no. Okay, some more names and just a quick update on 3 or 4 names. Inox Leisure is a company in focus because they have announced that the issuance of shares to the promoter group at about 250 rupees per share. Do watch out for that stock in the session today as well. Gurmeet, any thoughts here? Inox Leisure?
No, I prefer, so I don't track that Neeraj very closely, but in that space, related space, we track PVR and some of the media stocks. they will be in focus. I think we've seen consistently, especially in the media space, we've had Sun and Z both not doing too great. Sun also had a softish quarter, but I think the advertisement revenue, the subscription revenues are all picking up. So possibly though that's a better space we are more comfortable advising clients to invest in.
Jayabala, some of these metal names for you, a JSPL, a JSW Steel, I mean, valuations have been slightly stretched up until now. But from a trading perspective, would it be more pain for these counters now, or you see a turnaround?
It looks like these metal counters are likely to see some sort of rally, at least a sizable relief rally, and it's tradable. So you can be long in Tata Motors and Tata Steel, and I would expect Tata Steel to touch somewhere close to 600. So even comes to JSW, it's come to the minimum support level of 305, and it's bouncing back from there. So I would expect some sort of a bounce back to come through somewhere close to 355 to 360 for JSW Steel. So this is it could be a turnaround, but I'm taking this as a sizable relief rally.
All right, a relief rally in there for some of these steel companies. 26 seconds left to go for market pre-open. All eyes now also on the currency. Yesterday's close was below that $70 mark at 69.85, so we can watch out closely for what the currency does this morning as well. That's the Asian market pack for you on your screens. Not much of a change. Hang Seng just improving a bit more. SGX Nifty though up about 1/3%, no material change from the last time that we took a check. Pre-open on your screen, 0.5% gain on the Nifty. That's 10,890, 67 now. Sensex is well up about 0.25%. Individual counters then to keep an eye out for them, seeing what's happening thereabouts. Indiabulls Housing is showing you a 10% uptick. That should cool off. Bajaj Finance is the other one, 1.9% higher. GAIL is up 1.8%. Maruti Suzuki, an SBI 1.25%. TCS moves up. Tata Steel, Tech Mahindra, HUL are all amongst your big gainers. Infosys also up about 1%, Cipla is up about 1%, and Yes Bank. Yesterday, interestingly, from lows of 147, the stock managed to pull right back to 160 odd. Today is up about 1%. Marginal uptick after the kind of rampage sell-off that we've seen on the counter, but nonetheless at 162 right now. Amongst some of the losers, UPL's down 9%. All right, that's gone. So Ultratech Cement's down 4%. Bharti Infratel is down about 2.8%. Hindalco is down. You've got Tata Motors 1.5% lower, and JSW Steel continues to grind a bit more lower by about 0.75%. The currency strengthens further, so 69.7 on the rupee versus the dollar. Interesting, back to square one, back to pavilion, if you say, with the rupee from where it started off.
Yeah, and not bad at all. It's above 70 in a meaningful way now. And clearly looks like the RBI is not thinking of intervening at this point of time at all and buying back some of those dollars that it repaid. Remember, Harihar was speaking about it yesterday, but I guess rupee on its own merry ways right now. The bond yields, I know they've been marked it, but just want to bring up the bond yields as well yet again, 7.62, steady as she goes. So what about the mid caps and the small caps? There's some, okay, so the housing finance companies, Dewan Housing has a 6% uptick for itself. Not just the housing finance companies, but MDFCs. So Ujjivan Financial Services, and again, these rates might well change, but looking like starting off well. Equitas too was looking like starting off well and it's completely bounced off. So just wait and monitor some of these names before you think about going out and trading them. PNB Housing Finance should come up on your screen, and let's see if that is reacting ever so marginally, so not quite. ITI, a small cap PSU name, tends to react very materially when some announcements come about. 4.5% right now. Let's wait and watch if this one has more in store. Tata Motors DVR, by the way, in line with Tata Motors, is correcting, so down another 3% for Tata Motors DVR in the session today. And last but not the least, bring up Inox Leisure and see what that is doing in the session today. Well, about 1.5% higher. So no big reactions in the session today, but not too much expected. The world markets are quiet. We might start off with a slightly quiet fashion as well.
10,900 on the index.
Yeah, that's probably that one thing to watch out for in the session today. 10,899 currently. Let's see if we hover under 10,900 or do we eclipse it convincingly. Let's go across to Somit Sarkar, who joins in with the top brokerage calls for the morning. Good morning, Somit.
Good morning, Neeraj. On the big brokerage calls for the day, first we have is HSBC on Sun TV. Now, the brokerage has maintained its hold rating on the stock, but has cut down the target price on Sun TV to 703 from 855 rupees. Now, according to the brokerage, the biggest worry for Sun TV is this constant decline in its viewership share. Along with this, the new channels launched by the company are also not getting much traction, which is again a big negative for the company. Now, the company is also looking to invest in video on demand digital platform and in new markets, which will require more investments and which will mean higher capital expenditure in the coming years. Lastly, the upcoming national election is also likely to create an uncertainty over the advertising revenues of the company, as majority of the channels in South India are owned by political parties. And to reflect all these negatives, the brokerage has cut down its revenue and earnings estimate on Sun TV for financial year 2020 and financial year 2021. Now, second we have is JP Morgan and SBI. Now, the brokerage has maintained its buy rating on the bank, but has hiked the target price to 400 rupees from 360. Now, according to the brokerage, India's largest lender is sweetly positioned to benefit from the NPL resolution and the increasing rate cycle. Now, JP Morgan says that the bank's margins have multiple levers for an up move, like the rate upcycle, lower NPAs, pricing power, and the market-leading deposit franchise that SBI currently holds. Now, SBI stress formation has peaked, and it has seen coming it off from the peak of its in the fourth quarter of financial year 2018. Now, the brokerage also believes that the bank is entering a resolution cycle wherein eventually NPL recoveries have been much better than what the market was estimating. Lastly, value unlocking in subsidiaries of SBI would drive a fairly big re-rating for the bank over the next 2 to 3 years, according to JP Morgan.
Okay. Samit, thanks very much for that. Those are some quick brokerage calls that are coming in. Gurmeet, one last question before we let you go. Anything in specific that you feel that there's, probably the risk reward is in favor right now, and if you have to make fresh investments, that's where it should be?
So two places, Devina. One is, as Samit was covering on SBI and Axis. I think one key thing we are missing out is the rally in the bond prices. We've seen a 60 basis points softening in the 10-year from the peak of 825 to 760 levels. Also, there is a lot of softening happened at the mid end of the curve. So if you see the 4-year, 5-year GSEC, it's rallied by almost 75 basis points. A lot of these banks have 28, 29% SLR, despite the RBI mandate being around 19.5. So there will be meaningful treasury gains, which were actually MTM impacts for last 2 quarters. The credit cost, especially for SBI, the estimate is could be 2% for 1920. Slippages are coming low. There are a lot of assets. We keep hearing the big ones in the news, but there are a lot of small, cases where even the mid-sized loans are at a very advanced stage of resolution, where the provisioning has been almost 80%. So there could be some write-backs there as well. And I think we are now seeing quality getting differentiated. So with this NBFC crisis, if you see some of the quality ones have already made smart comeback, not only in terms of the incremental business they will garner, in terms of the lower rate at which they will raise money. So already see Bajaj Finance, STFC Limited, bouncing back from smartly. The second place is FMCG. Especially ones where the personal care and the home care, we saw good volume growth and low margins, largely because of high prices. That's likely to reverse. We have seen some unprecedented spending in 4 or 5 states which have gone into election. I mean, I can't really disclose the numbers on television, but it's quite unprecedented, and it will really going to boost the consumer staple numbers across the top 3-4 counters. So an HUL or a Marico with copra prices also down could be top picks there as well.
Okay, Gurmeet, appreciate you taking the time out and joining us. Thanks much for being with us today. By the way, just before I get the next guest in, 8K miles, and I really don't know what's happening here. 183.85, it's up another 5%. It's just gone one way in the last 15-20 odd sessions. Just be very careful if you're trading this though. Deepak Jasani, Head of Retail Research at HDFC Securities, joins us right now on the show. Deepak, good having you. Thanks so much for joining in. In the morning meeting today that you guys would have had, what was that one name that came up for the most active discussion today, Deepak?
Good morning. We have basically markets have been doing well for the last 2 sessions, and we continue to believe there is some more steam in the markets. And so basically, the auto stocks and the BFSI stocks, these two will participate the most in this expected up move over the next few days. And we are looking for another 500-600 points in Nifty, maybe after a brief pause of a couple of days.
Right. Deepak, one particular pocket, I mean, not just a pocket, but, probably a strategy that one could adopt right now. Whether to play, obviously the markets have been making their move and everything is moving up. So you've got much of the interest back into the high beta spaces. But if you were to probably just factor in the volatility that could come about because of elections, does it make sense to have an equal amount of weightage to defensives?
I did not get to the last sentence. Equal amount of weightage?
Defensive back.
No, again,
your FMCG stocks particularly. If you want to probably not just, if there is going to be volatility and you expect your portfolio, which has high beta names, to see an impact on the negative side, then to balance that out, would you go ahead and invest more money in the FMCG names?
Yeah, so now I think the markets are headed for a run over the next few days. And at such times, to park your money into defensive will not be a great strategy in our view, because whatever has fallen more, whatever has been beaten down, sort of will bounce up, will correct upwards more. In that sense, staying with the high beta would make sense for the near term. FMCG as a sector is still not related.
Deepak, I think we'll come back. Deepak, I think we'll come back. I think the audio is just a bit patchy. We'll need to try and repatch this line in order to get the clear response from Deepak Jasani. Let's wait and watch and do that. A minute away from market open. Let's tell you all that you need to know and then get in some thoughts from Jay Bala as well as Brijesh as well. They are waiting. But first, all that you need to know. A temporary halt in Jaguar Land Rover's engine factory in English Midlands could reflect on Tata Motors stock today. Looks like starting off 3% lower.
And Crystal downgrades Vodafone Idea's debt rating, citing continued pricing pressures in the telecom market.
Shankara Building Products will be in focus as the company hosts a con call at 3 p.m. to update on business.
In key bulk deals, Pabrai Investment Funds sold 9.48 lakh shares in Repco Home Finance at 336 rupees per share.
In brokerage calls, HSBC cuts Sun TV's target to 703 rupees from the earlier target of 855, citing declining viewership share.
And JSW Steel emerges as a sole bidder for Monet Power and Adani backs out, according to Business Standard report.
Okay. Housing finance companies look like starting off well. Jay Bala, any of the HFCs, Indiabulls Housing Finance, Diwan Housing or otherwise that you would take a trade on this morning?
This is a very, very tricky sector. It's coming close to a bottom, but it's a falling knife. It can get extended. So it's a risky bet. I wouldn't venture out and buy anything. Especially this space is very, very tricky.
Jay, the one stock that's run remarkably well. You had a call on India Cements, which I'm tempted to ask you, is Kesoram Industries. More often than not on the upside. How do the charts look here? Does it look overstretched?
Yeah, see, this sector, as I said earlier, is seeing some amount of traction, and this is one of the better performing stocks. But Kesoram has broken out of a range, and it's consolidating in a sideways fashion. And this looks like this consolidation could last for another couple of sessions. But once that is done, I think this is running much higher. The low from mid 55 onwards to 82. Is looking like a middle portion of the move. So probably another stretch higher once it crosses 85. I wouldn't be surprised if it touches 130 over a couple of weeks. So wait for a breakout above 85, 86 and place a stop below 77 and expect this to happen. Don't preempt this market. It could stretch sideways, but we want to see it across 85, 86 on an intraday basis. Once it's done, you can pull the trigger.
Okay, let's talk about Adani Enterprises. The stock in yesterday's session was, on a tear. Brajesh, on the stock, is there a trade that's could be taken in today's session?
Yeah, I think 165, 166 is a strong support band purely from a momentum-based trading. And I think 173, 174 upside can be expected on the cards. So from a trading point of view, yeah, one can look at around 166, 177 as an entry point, and 172, 173 on the upside as a target.
Okay. The other one would be Hindalco. A quick take on Hindalco, Brajesh, before we go on to the top calls.
I think better than Hindalco, I would go long on VDL because if you look at the VDL, it has given a breakdown and around 190 to 193 and seen a strong reversal. Then if you look at the volume wise as well, VDL is gaining a strong momentum, and I think it is showing a sign of shakeout, which means that the stop loss has been triggered and bears might exit it out or push stop loss triggered, and it's showing a sign of good momentum. So I will go to weightage on VDL over Hindalco for long side, and I think 218, 219 is the level upside I'm expecting on VDL with stop loss of 192.
Okay, 30 seconds left to go. Quick top calls from both our technical experts. Jay, we'll start off with you. Quick 10-second answer.
It will be Dr. Reddy. Wait for a breakout about 2670. Once that's taken out, it has no resistance up till 3100.
Reddy's. Brajesh, what about you?
Other than two calls, I would look to bet on Cadila. Look at the yesterday momentum is very strong, and I think 364, 365 this momentum can be on cards. So look for Cadila on long side.
Okay, Brajesh, we'll let you go on that note. Thanks so much for taking the time out and being with us. We'll probably just take in opening thoughts from Jay post-market open, but here's how the markets are starting off about 1/3% higher for the Nifty and the Sensex. Not bad considering how soft the US markets were. The Nifty Bank, though, after remarkable up move yesterday, starting off slightly quiet. The mid caps and the small caps, they've been underperformers for the better part of the week. In today's session, starting off okay, about 1/3% for the mid cap index, so not bad. Small cap index ended in the red yesterday, about 1/4% higher. But the heat map should come up on your screen, and let's see what's moving and what's not. Well, Indiabulls Housing Finance, Yes Bank, Bajaj Finance, seems like financials are starting off on a good note. M&M has some gains, but aside of that, no, not too much. But a fair degree of green. So the breadth on the Nifty is looked reasonably positive. What's not done well? Tata Motors on news flow has corrected a bit, so about 3% lower. But aside of that, we don't really have too much within the index, which has corrected meaningfully. So no big gainers, no big losers. Some financials on the upside, Tata Motors on the downside. That's essentially the nature of the start today. Just a couple of pockets that I do want to highlight before I hand it over to Devina for looking at what's happening across the broader end of the spectrum. Housing finance companies, RBI has relaxed some norms, and all of these are starting off on a very good note. Indiabulls Housing Finance already marked up at about a couple of percentage points, but Dewan Housing about 4% higher, and PNB Housing Finance about 2.5% higher. So reactions on expected lines for some of the HFCs. What about stocks which are in news, the likes of ITI, Inox Leisure, etc.? Well, both of them are starting off well. ITI on the back of the continuation of the 30% reservation policy, procurement policy for itself from the PSUs, and Inox Leisure, promoter group Gujarat Fluorochem has been allocated shares at 250. That stock is starting off well. Devina, what are you spotting?
All right, let's start off with the mid cap and the small cap index, and like you highlighted, they are sort of pitching in today's session. Starting off with a Unitech, which is up about 2.3%, a Magma FinCorp that's moved up, should pull up the housing finance companies as well. So a Repco Home Finance to see how that is moving up, and Ujjivan Financial is up about 1.3%. Repco is down 3.5%. Godrej Properties has moved up 1%. You've got the likes of an IFCI, Century Ply, OMDC, which is up 1.5% this morning. JK Tyres, that's up 1% as well. DV's Lab moves up 1%. Amongst some of the losers from the mid-cap space, just to quickly highlight, and Ashoka Buildcon, which was yesterday's one of the few gainers there, is down 2% in today's session. KPIT Tech is down 2.2%. You've got the Kaveri Seed, Allahabad Bank, Zensar Tech, which has moved lower now by closer to 1%. From the small cap space, just to quickly highlight that as well, Dewan Housing Finance moves up. Oil India is down 3.5% at 194. Remember, their buyback comes in at 215 rupees per share. Kansai Nerolac is down 1%. You've got Sanofi India, Pidilite, Dish TV, which are all losing out within the small cap space. What's gaining is the Dewan Housing Finance, 4% higher, PNB Housing Finance, 2% higher, M&M Financial, Apollo Hospital, PFC, these are all gainers in trade today.
Well, interesting the kind of moves that we're seeing in select names. Jai Bala, before we thank you, what would you do if you had a long position on the index, on the Nifty? Would you take money off the table?
I'll definitely take partially some money off the table, if not fully. But I would watch for the market's action around 10,930. That's a very important resistance for the market. I would expect the market to give in most of the gains it's gained over the last couple of sessions at least. And so definitely take money off the table. Interestingly, Neeraj, we spoke about the Indian rupee last time, and there's a very important price pattern that's developing. If you still have the time for it, I'll probably go ahead with it.
Please finish your point, Jay.
Yeah, see, actually, the rupee's strength has lasted for 36 trading sessions, and that 36 trading session is a very important number because it's a square of 6, and square of numbers are actually very important price points. So, and it's also coming to very important resistance around 69.2 and 68.5. I would go and stick out my neck and say the rupee is unlikely to print 68.5. So watch out for further weakness to develop from current levels for the Indian rupee. It's seen its run higher. Probably the high is in for the rupee, and if you are a currency trader, one can place a stop below 68.5 and short the Indian rupee against the dollar.
Oh, okay. Jay, point well taken. Thanks much for taking the time out and being with us today and giving us your thoughts on a variety of issues, including the currency as well. Okay, now what's doing well is Yes Bank, and maybe that's something that we should talk to Deepak Jasani about. Deepak, a slightly difficult question, but what would you advise some of your retail investors to do with a Yes Bank if they are either holding it or if they are tempted to buy it? What would your advice be?
Yeah, that stock is a bit tricky. We don't have coverage on it, so we will not be able to comment on that stock specifically. But broadly, a lot of finance companies are showing a lot of volatility, including the likes of some housing finance companies. So there, our advice has been to our clients that you will have to keep some sort of a mental stop loss, a slightly wider stop loss, even if you want to trade in them, and then probably be ready to exit whenever the stop losses are hit. At the same time, the bounces could be very sharp in these stocks. So whenever the stocks start to rise up and make some sort of a bottom, then probably you can participate in that up move and get out also in time, because the bounces may not last long.
All right. Deepak, would you be focusing on the power space right now? I mean, lots been happening there. Talks of the merger between REC and PFC. Obviously, a wait and watch as to the Supreme Court verdict for Adani Power and Tata Power and what comes about thereof. But is that a space that you look at?
Frankly, we are not so keen on that sector because of the continuous regulatory issues on the one hand, and the other hand, the fuel pricing keeps getting volatile every now and then. Plus, the SEBs, the financial situation of the SEBs has not improved despite Uday over the last few years. So all said and done, I think although they are good annuity stocks, but they are subject to shocks every now and then. So from an investment perspective, unless you are very keen on dividend yields, I think you can stay away from them.
What about Tata Motors, Deepak? One more piece of bad news on a stock which is, yes, cheap on the valuation front, but has failed to deliver.
Yeah, so now the impact of every new negative news will be much more muted because the stock has already fallen quite a bit. So there is no need to get panicky now on every fresh negative news. Now probably is a time where you should be looking to start nibbling or accumulating these stocks over the next few months. So despite these negative news, I think one can take it the other way and start accumulating rather than panicking.
Interesting. Okay. So Deepak Jasani's view is that you can accumulate some of some companies like Tata Motors because incremental reactions on negative news will not be that high. Deepak, do you as a house have coverage on the Adani Group, and by the group, I don't mean you cover the group, but any of the group companies, save for Adani Ports, that's the large one. What's been more active are the smaller ones. Adani Power at 52-week highs, Adani Transmission doing really well in today's session, and Adani Enterprises, the last 4 or 5 sessions has been on a bit of a roll. Do you track any of these 3 names?
No, frankly, we don't. Basically,
okay.
They need to sort of improve on the governance and transparency norms, and then probably we'll look at them.
Okay, what was the pick of the week, Deepak Jasani, this time around? It's of course Friday. You would have given out that call on Monday, and I can't ask you for the next Monday's call. So let me ask you about the Monday's call gone by.
The Monday's call was from our core research team, which was Subros. So basically the car AC manufacturer, where they feel that the stock is in a good shape and could run up about 15-20% from here in such turbulent times.
Okay. Deepak, your take now on the oil marketing companies and HP, BP, IOC, now on the back of the correction in crude oil prices and the possibility of improved marketing margins for them?
Yeah, so oil marketing companies on the one hand look very, very cheap in terms of core fundamentals. On the other hand, they are also subject to a lot of volatility, one in terms of the oil prices, two in terms of the possible government intervention in terms of pricing and subsidization. So I think for the time being, one can trade long in these stocks. But if one wants to invest, then maybe we'll have to wait for some sort of a panic bottom, which may happen in the next 2 or 3 months.
Mm-hmm. Anything in particular that you're, really optimistic on, and that is a pick that you would like to put money into?
We continue to like the BFSI space generally. As a matter of fact, 2 weeks back, we had LIC Housing Finance as our pick. So there we think the market has sort of been a little unkind to all these companies, and especially LIC, and beating down their valuation to as low as 1.4 times book, FY20 book. So from here on, I think select BFSI companies can still do well, despite all the talk about NPAs, slowdown in NIMs, etc., etc.
Okay. Deepak, I can just go back to the ideas. Now, it's interesting that you're looking to buy into a Subros when auto sales are just showing that some sign of slowdown. What's the rationale into buying a Subros?
Yeah, so as I said, our sister team has come out with the report. But anyway, from whatever I could recollect, the auto ancillary space, a lot of them have been beaten down quite a bit. And Subros is a unique company in terms of there are not many competitors in that space. And AC is going to be sort of made mandatory even in the CVs going ahead. So despite now it will have a larger market to cater to. So far it has been focused mainly on passenger vehicles. Now it will also have access to commercial vehicles going forward. So despite the fact that passenger vehicle sales are maybe slowing down a bit for the next few months, the market for the company will grow, and the company will keep growing at a decent pace.
Okay. Just looking at the large cap space right now, I think the stocks that are reacting duly, Yes Bank is arguably the top performer, and that's up about 5% on a day when the Nifty Bank is not reacting at all. So that's interesting. Bajaj Finance yesterday was amongst the top ideas from our technical experts, and that started off a couple of percentage points higher. But it's just a clutch of heavyweight banks which are staying soft, which is leading to the Nifty Bank not doing well. So HDFC Bank is down about 1%. Kotak Bank is, after a big move yesterday, is down about 0.15%, and the others are trading very, very flat, as a result of which the Nifty Bank is not being able to make any kind of decisive move in the session today. Deepak Jasani, one last question from my end. Is there a safe dividend yield play that your research suggests people can get into something which will not get bogged down by government using the money to buy into other PSUs or otherwise?
I think PSU as a space gives you the highest dividend yield. We have been coming out with dividend yield reports once a month. And within that, I think 7 or 8 out of the top 10 are PSUs, whether it is Coal India, whether it is oil marketing companies, whether it is power companies. So one will have to take a very calculated risk in these PSUs that they will not run out of cash or profitability due to the action by the government asking them to buy stakes in each other. I think coal among them looks a little more safer because so far it has been untouched, and even fundamentally it looks a little less likely to fall very substantially from these levels.
Is real estate of interest to you, Deepak?
So real estate sector, I think, will undergo a lot of consolidation. The larger players will become even more large, and the smaller players will get slowly will get out of business, or they will get delisted. That is what we think. But within the larger players, I think the consolidation phase and the effect of the consolidation will take about 1.5 years from now. So one can take a bet on these larger players maybe 1 or 2 quarters down the line rather than jump in right away.
Okay, now Deepak Jasani, we'll take a moment to thank you for joining in today and giving us that perspective. Really appreciate your time, and thanks for our ideas as well. That's Deepak Jasani of HDFC Retail Research. By the way, his view is that if you want to buy into one company, Subros could be a name to get into 20% earnings growth, but it's a tactical idea given by the other team and not really Deepak Jasani's team. Having said that, that's a company that people could look at. What's doing well, before we take that break, what's doing well and what's not doing well? So Oil India corrects about 4.5% yet again, 192 and counting. So a good dividend yield stock, remember the risk that we were talking about in the morning today, a good dividend yield stock becomes cheaper in the session today. Equitas Holdings is down about a couple of percentage points, 104. I think yesterday, one of the large holders sold some stake in Equitas Holdings, so do watch out. Vodafone Idea continues to become a bit cheaper. Repco Finance about 1.5% lower. Not all housing finance companies will benefit from the RBI move, and the Repco Finance management was candid enough to say that they do not benefit materially out of this. What's doing well, aside of ITI, which is the top gainer, are stocks like Diwan Housing and Yes Bank. So DHFL is up about 7%. Yes Bank is up about 5% in trade. So really strong show by both of these names in trade. And Vakrangi has been on an uptick. I think they got some, they released that the SEBI's found no wrongdoing evidence in Vakrangi's case. So that stock has done about 5% in the session today, good going. From amongst the housing finance companies, Devina, Canfin Homes has not done too badly for itself, up under 2.5%.
Right, that's the market snapshot for now. 10,900 being held onto the index. Banks are fairly flat in trade this morning. But on that note, we're going to take a short break, and on the other side of the break, we will discuss the increase in stamp duty in Maharashtra and the evolving liquidity situation with Sangeeta Prasad of Mahindra Lifespace Developers. And also our soft crude and pet coke prices bringing cheer to cement makers. We asked the whole-time director at Sanghi Cement, Beena Engineer.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here. There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that will sustain.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We're getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Welcome back. You're watching Indian Open. Let's talk about specific stocks then. And Mahindra Lifespaces has been steadily increasing its presence across the country. One of the early movers in the affordable housing segment. The developer has seen its revenues double over the last financial. But what could be a spanner in the works is that the Maharashtra government's decision to hike stamp duty from 6% to 7%. That's not good news for a player which gets a majority of its revenues from Maharashtra. So how does Mahindra Lifespace, and rather, how's it bracing for this particular knock, and how big an impact will this be? Let's ask the Managing Director and CEO, Sangeeta Prasad. Ms. Prasad, thanks very much for taking out the time. Let's start off with that very question with regards to the increment of stamp duty within Maharashtra from 6 to 7%. What is the likely impact for Mahindra Lifespaces?
Yes, that came as a surprise to us. But as I look back and reflect, I think it is meant for the larger and the longer good. Any kind of duty addition in the market does have a short-term impact. People do look at it negatively. But I think with the market and our end-user focus, we should be able to attract the right customers. And in the long run, it will do good for the state.
Nonetheless, Ms. Prasad, is that, when you talk about, short-term speed bumps, to actually converting those interested clients and making them go ahead and purchase those houses, the incremental cost, do you think is going to be that much more for them to sit on the sidelines and instead convert their purchases?
You know what, in the last 1 year, Mumbai has had a different issue, which is the DP34. I look forward to the resolution of the issues related to the DP34, the transition policy, because many of us developers, responsible people like us are waiting to launch, and many customers are waiting for a product. As you know, the market has seen a paradigm shift. Responsible developers like us will get the right clients because they believe that they will get their product and their home at the right time at the right price. So I do not see that as a long-term or a medium-term impact. Of course, as I said earlier, any duty which comes into the market does create its short-term and immediate-term dent. But with I'm more interested in the resolution in the transition policy and the DP34, get our launches, go to the market. And I always think in this large country of ours, when there are so many people wanting to buy homes, people like us always have a place under the sun.
Right. While we've been talking about the slightly low-cost housing and the more affordable housing spaces, you've also made your foray into, the launch of high-value projects in Mumbai, particularly. You had a recent launch in Kandivali. Do you see that getting materially impacted? Because obviously now, if it's a high-value project, the increase in stamp duty pinches that much more.
You are very right. Any increase in any duty does pinch, and customers do come back to us and tell us what we can do about it. So we follow a very rational, logical approach. We look at the customer, we look at the market and look at our pricing, and that's how we face the market. Incidentally, the product you are talking of has very little inventory. So I am not seeing that as a very big dent. But of course, it is a dent on the customer's pocket. And whatever we can do to alleviate that dent, we will surely do. keeping in our market considerations.
What's your plan for Mumbai? Are you expecting to, make it a big market for yourself?
I think I will just step back a little and talk about what's happening in the real estate sector and therefore on what's our plan for Mumbai. I think that the last couple of years, this sector has undergone a cataclysmic shift, if I may say, with all the regulations converging towards transparency and symmetry in the market. And if you ask me, this is the right time for us to win and grow. So I see Mumbai being a very, very important market for us, apart from Pune and Bangalore. With these market focus and with our current aspiration and opportunity for growing, with the reliance of the customer on our products, I see these markets becoming really fulfilling for us in our journey ahead.
But would it be just enough to focus on these three cities, Mumbai, Bangalore and Pune, or a bigger diversification into the tier 2 cities also is something that you're going to be focusing on actively to make sure that the revenues keep coming in?
So that is the balance in real estate. Real estate is a very micro market and a detail oriented business. And with our denominator at this point of time not being very large, I think these three cities as a priority one market and the other two cities, which regions we are looking at, NCR and Hyderabad, would be able to fulfill our aspirations for profitable growth. And we have the Happinest brand as well, which will bring in the volumes. And I think the volume value combination of the two brands and keeping the customer focus will help us fulfill our aspirations for growth. I am confident of that.
Okay, could you throw some light on the numbers and the expectations thereof? What do these translate into while you're going big on these particular cities and you're planning in the right direction, but from a shareholder perspective, it needs to translate into numbers?
You're very right. That's the whole focus. But we don't give forward-looking numbers. But I would like to assure our shareholders through this forum, it is a very ambitious and exciting journey. But the two factors which help this real estate market are resilience and patience. And I am confident with my team, we will be working towards fulfilling the shareholders' reliability on us.
Okay, let's talk a little bit more, about what's been happening in terms of the current liquidity scenario in the market and whether or not Mahindra Lifespace is facing any sort of a liquidity crunch with regards to the flow of money from NBFCs, and what's the exposure there?
Yes, the NBFC liquidity stress has created issues in the real estate market because many of the real estate developers have hitherto been financed by the NBFC source. So it has impacted quite a few, leading to a lot of stress in the market. Personally, for us, we are very, very cautiously funded through the right routes. It has not impacted us as a developer, but many of our customers have also got impacted, especially in the Happinest segment. But I just want to assure you that we have been talking to our customers and we are finding out sources so that they are also not hampered anyway. And that is the power of the Mahindra brand, because the other sources of finance do look at us and finance our customers. So that's the current system, but there is stress, and I think in that stress there's an opportunity for people like us. Can we look at some of those stressed assets and look at it prudently and judiciously and take over some of those assets? That's one area we are focusing on, and hopefully in the near future, if things pan out well, through our due diligence and evaluation, we'll have some of those products in the market where, we'll give good products in the market by a responsible way of practices.
The servicing right now is not a big issue for you, interest servicing?
No.
Okay, you're comfortable with that. But, from quarter 1 to quarter 2, there was a slight marginal increase in interest cost. Is that of significance, or that is a normal course of business?
So of course, the overall interest scenario, as you know, has hardened in the last few months. and any hardening happens, it obviously impacts you. But at this point of time, with our kind of access to capital and our strength of our brand, we do not see that as an impact. But obviously, we have to keep our eyes and ears open and see that we do our business well, but not an indelible impact for sure at this juncture.
Okay, is there a need for additional funds for upcoming projects right now, and what are the source streams for the same?
We would love to actually fund our projects both through internal income as well as through the various funding sources, because the idea is to grow. And if you look at our debt equity situation, we have enough opportunity. So that's one, we can leverage further. But we also have a lot of people who are interested in partnering in JVs with us. So we are evaluating that opportunity where we can go to the market together and yet not overstress our funding capabilities. So I see that as an opportunity and not as a constraint at all.
So there's no immediate requirement for funds?
Of course, we are evaluating lands, dear. So when you evaluate lands and you need to pay the landowner, we have a requirement for funds, but it is not a constraint. We have availability as well.
Just one last question from my side.
Because I would be foolish if I do not fulfill. Yes.
Yeah, no, go ahead. Finish your point.
Yes, please. No, I'm just saying I just want to reiterate that it would be foolish on our part when we have all the opportunities and the right to win. We do not go ahead and fund ourselves prudently and fulfill our growth aspirations.
Okay, so when you're talking about these opportunities, I keep coming back to, probably if you could throw some more color on how big these opportunities are.
These are opportunities in the markets of our choice, which I explained to you earlier. So you know these markets, and those opportunities would be, I do not know what you mean by big. The opportunities are very credible and would help us expand our footprint in these markets.
All right.
Sangeeta, I just have one question. I know you mentioned that you would use this forum to assure our shareholders that you will do your best to grow. I'm just trying to get a sense from you as to what's the quantum of growth could be for companies like yours, because typically a large company would grow a few percentage points higher than what the industry growth rate would be. If you can't quite mention explicitly what your growth numbers could look like, can you tell us what's the CAGR growth for the industry that you anticipate over the course of the next 3 or 4 years?
You see, the industry is growing to a very, very different way. There will be, first of all, consolidation. So it would be foolish on my part to give a percentage or a scale. But I see a few developers would become major and very, very important in the scheme of things. The fragmentation will reduce. There will be top 10, top 20, top 30 developers who will actually own the market, give products to the customers, and the customers will be end users. So with that two variables shifting, there will be a consolidation, not leading to unprecedented growth, but very good growth in the market for relevant players. So that's how I would leave it, because the two variables are too difficult for me to predict. But I surely see growth for responsible players in the market, thanks to the consolidation and thanks to the end users buying. The comforting part in this business is people are being born every day, and homes are still the most important things in the lives of Indians. So people will buy, and the right people will buy from the right developers.
Yeah, I agree, Sangeeta. But it's something that we've heard all through these years, right? Right from Arun Nanda to otherwise, and from some of your peers as well. And some of the companies, and you in particular, have grown a little bit. The question mark only is that even if you can't predict for the industry at large, even if we say that the growth rates would be more stable for the top 20 or top 30 players, is there some number, some arithmetic that you can leave us with?
I think I should meet you separately and work out the arithmetic with your guidance.
Oh, well, with my guidance, I don't know. Maybe with my questioning, And probing, maybe we can arrive at a number. Your guidance and my
Yes,
probing.
yes,
Maybe
you
that's
go
the way
on
it will be.
probing me. It will help me to do some arithmetic.
Well, maybe that's
It
the
will
case.
be always welcome. Let's catch up soon.
Would be lovely to do that. But Sangeeta, thank you so much for taking the time out and being with us today. Appreciate your candor and appreciate your time today.
Thank you so much as well.
All right. That's, well, a fairly candid conversation. And I think it's well put, maybe. It's just probably difficult in these volatile times to predict what the growth numbers could look like. But hey, we are bloodhounds. We try to elicit a number almost every single time.
They do have opportunities, like she said, and they are looking to capitalize on it. Though it would have been nice if we would have known where those opportunities are coming from and what they'll actually translate into.
Yeah, I guess so.
But you can meet her and let us know.
We can do that. Call her to her office. But anyways, with that, it's a wrap on this leg of Indian Open. In a few minutes from now, the FNO show will take forward the action on the other side with all the key stocks in news. Thanks so much for watching this leg.